This is Cary with Wicked Stocks, bringing you a weekly SPY update. That's the Spider S&P 500 ETF. This is becoming a norm, these weekly SPY updates. And FYI, starting next week, the first Monday of October, I'm going to be doing these on a daily basis with a more fine-tuned approach. Also, more levels to look at. Because it'll be day to day, it'll be good for the day trader, swing trader. The weekly reports are obviously good, not only for the day trader, where they can hit some of these occasional points intra week, but the weekly levels are obviously good more for the fund managers and the position traders who are holding SPY positions for many days or weeks on end. I did record this video on Monday, September 27th, FYI. I'm going to be going through a handful of charts here to show you the basic framework of the SPY as I see it in terms of the line studies that I use. But once again, I'll be doing SPY analysis on a daily basis beginning the first Monday in October, a week from today, basically. Initially, for the first week or two, it'll be free as the weekly videos are. But at some point in October, I'll begin charging for the daily SPY, but it'll be a very reasonable requirement of only a premium membership for Wicked Stocks. Wicked Stocks, by the way, if you're not familiar, is a service that I started about a year ago. I provide at least 2 stock market recommendations a week. And I do occasional SPY analysis, now weekly SPY analysis. And the premium membership is $24.95 a month. And with that, you'll get the 2 stock pick recommendations, but also daily SPY analysis. So that's actually a package that I think is well worth the money, if I might say so myself. Let's jump to the charts. You're looking at a weekly bar chart of the SPY, symbol SPY, the S&P 500 Spider ETF. I'm going to remind you of a rising trend line. I'm not big on trend line analysis per se, but when they stretch out over a year, I begin to take notice. And this one I did a couple of months ago, and in fact, it did hold the highs about a month ago, and we came off it. It's 462.28. It is a level that we need to get up and over at the end of any week. We're already in, let's be clear, longer term bullish continuation. But I think if we can get up and over 462.28 in the coming weeks, and I do think this is likely to be retested over the next 2 to 3 weeks. If we can settle above it, then I think we're going to have a more accelerated upside pace through the rest of the year, whereby that 509.95 channel top, I think, becomes a realistic 2 to 3 month objective where we can top out on a quarterly basis. But until then, holding below 462.28 allows continued testing of this 439.66 channel bottom. Now, last week's SPY, I mentioned it could contain weekly, possibly monthly selling pressures. That obviously didn't happen, and we broke below it. But we did settle above it at the end of the week. We also settled positive on the week itself. So I'm going to continue to give this 439.66 the benefit of the doubt in terms of its ability to contain selling pressures this week. And holding above 439.66 this week, I think there's a likelihood that over the next week, 2, 3 at the very most, that 462.28 trend line is likely again. But, if we close the week Friday below 439.66, then I think you can expect within 2 to 3 weeks, probably more like a full week of activity. I mean, 'tis the season. It is October, or soon to be October. This is the time of year oftentimes where the market has sort of these sudden, meaningful downside retracements. And so closing below 439.66, even on a daily basis, you should, I think, be open for the possibility of a sell-off into later week. But closing the week below 439.66 would signal 411.31 within a week, 2, 3 at the most. 411.31, that channel structure is based on that trend line, really, at 462.28. It is a channel bottom based on that trend line. 411.31, able to contain selling through the balance of the year. And once tested, we can stabilize, turn higher into later year, and push onward and upward to new highs within 2 to 3 months. If, and this is sort of a worst case downside scenario, I don't expect to see this, but if we did close below 411.31, then we have an aggressive more aggressive, I'm going to call it a collapse, down to 364.31. That could be within a week, but more than likely 3 to 5 weeks of closing below 411.31. That 364.31 channel bottom is what I would call more of an ultra long-term support level. It goes back a year and a half that can absorb selling not only through the rest of the year, but even through next year. And from there, we can push on to new highs into Q2, Q3 of next year. I think that kind of, let me finish with this actually, and this is more of a near term this week upside, just to remind you that the high from a month ago was 454.05. And that is a level that can contain this week's buying pressures. But if we close above 454.05, we're probably 3 to 5 days away from reaching 462.28. Now, with regard to the daily SPY analysis that's forthcoming here next week, excuse me, I would zoom in, open this chart up, take a look at the Fibonacci retracements to the upside, take a look at other chart structures that are meaningful on a short to near term basis. Short term for me is several days. Near term is a week or two. That's kind of the way I break it down. Just to let you know. And it'll be free for the first week or two, and then we'll segue into a paid format for the daily SPY analysis. And I think that's really all that needs to be said for this week's S&P 500 Spider ETF analysis.